Tim Waterer joins us now from Sydney. He's Chief Market Analyst at KCM Trade. Good to speak to you, Tim. Now, oil has swung from fears of oversupply to concerns about disruption in just a matter of days. Does this reflect genuine supply risk, or are traders simply repricing geopolitical risk with every new headline?
Nice to be with you again. Yes, I think it is very much headline driven. We have seen risk premium re-entering the oil market pricing since that announcement from Trump. Now, having said that, I mean, we've had this ceasefire in place since the middle of last month, and it's been a ceasefire in name only on various occasions. So we have seen several flare-ups, but I guess Trump is sort of saying what a lot of the market has been thinking, which is that he's very much on again, off again in terms of this US-Iran relationship and ceasefire. And of course, now there's a lot of uncertainty as to what will happen with the traffic through the Strait of Hormuz. So that's why we're seeing oil prices moving higher. I think the market is taking some heart from the fact that Trump has left the window open for negotiations to still happen. I think if the market thought this was the end of the diplomatic road, we'd be seeing oil prices a lot higher than where they are now. Because yes, we've seen a big increase in prices today, but still prices, say we take Brent contract, for example, it's around about the price it was in the middle of last month when the memorandum of understanding came into effect. So not the worst move in the world, but certainly not a great move for risk assets, and really due to the question marks as to how will this affect shipping through the Strait of Hormuz moving forward.
Higher oil prices typically feed into inflation. Are markets now reassessing the likelihood of interest rate cuts by the US Federal Reserve later this year?
Yes, we've seen a predictable move by a lot of the assets today. We've seen the US dollar moving higher, moving up on the back of higher bond yields. So that, bond markets around the world, they have certainly reacted to these high oil prices and are now expecting potentially more hawkish central banks if these higher oil prices stick around, and if that translates into higher inflation moving forward, which may necessitate rate rises. Other assets, gold moving lower because of that expectation we could have rates moving higher later this year. So yeah, a lot of uncertainty still, but certainly the moves in oil prices, that has seen a repricing and bringing, I guess, more into play the chance of a Federal Reserve rate increase around September time if these oil prices, which are elevated, persist further.
Meanwhile, South Korea's Kospi has had a remarkable rally this year, driven by chip makers like Samsung, which is now down significantly despite its high profit forecast. Are investors no longer interested in the AI rally?
I think the bar is a lot higher for the AI trade than it was certainly in the first part of the year. Now, Samsung, that's a great example. It had a bumper profit announcement this week, but that wasn't enough to please the market, and it's come off quite a bit on the day of the announcement. And you mentioned that the Kospi is still the best performing of the major indices around the globe this year, even though it is now entering that bear market territory. So there are some lingering concerns about whether the margin on chip production, if we're sort of at a peak there at the moment, that's causing a bit of hesitation. And I think we are seeing this general rotation where traders are looking outside of the perhaps overvalued chip stocks and undervalued sectors of the economy which underperformed in the first half of the year. So a number of moving parts there right now. Bar certainly high for the tech sector to wow the market. Having said that, I think if this I guess bearish turn persists, we could see it flip again and they start to look pretty good value, particularly if the expectation is that Samsung and other chip makers can keep delivering bumper results, much like we saw from the giant yesterday.
Tim Waterer in Sydney, great to speak to you as always.